Good day, everyone. Welcome to our video lecture for income taxation. I am your instructor, Ms. Jazel May Celerinos Del Monte. So our lesson for this video is all about the taxation of individuals, which includes the determination of individuals' taxable income and tax due. So first, let us understand the relevant or important terms in relation to the taxation of individuals. So first, let's have the individual taxpayer, which means individuals who are subject to final tax, capital gains tax, and regular income tax. So these are individuals that are need to or that needs to pay their taxes in relation to their income earned, such as passive income, their active income, and capital gains. Next, citizens. What do you mean by citizen? Those who are citizens of the Philippines during the adaptation of the February 2, 1987 constitutions, which includes those whose fathers or mothers are citizens of the Philippines, those born before January 17, 1973, the date of the adaptation of the 1973 Constitution, of Filipino mothers who elect Philippine citizenship upon reaching the age of majority, and those who are naturalized in accordance with the law. So I know most of us are considered as natural-born Filipino citizens. Next, resident citizen. So, a citizen may be a resident or a not or non-resident citizen. So, what is a resident citizen? So, it is a citizen of the Philippines residing in the Philippines. So, it is very understandable the meaning of the resident citizen. So, katong mga Pilipino nga nagpuyo diri sa Philippines. While non-resident citizens, these are citizens staying abroad for at least 183 days or equivalent to 6 months. So, who are citizens that are considered non-resident citizens? So, example, we have the immigrants. So, pag may tag-immigrants, these are who leaves the Philippines to reside abroad as an immigrant for which a foreign visa has been secured. Next, permanent employee. Ano sila, na sila'y residents diri sa Philippines, but they are now permanently residing abroad because of their permanent employment. Okay, so they leave the Philippines to reside abroad for employment on a permanent basis. Take note, class, permanent basis. Next is contractual worker. These are who leaves the Philippines on account of a contract of employment which requires him to be physically present abroad most of the time and shall not be less than 180 days. Okay? Those are considered as non-resident citizen. But there are non-resident citizens that are not or citizens that are not residing as of the moment in the Philippines but are not considered as non-resident citizen. So, who are those citizens, class? So, these are the citizens who work outside of Philippines for at least 183 days due to a contract of employment within a Philippine employer. So how does this differ to 4.3 item, which is the contract worker? Ang kaning nasa 4.3 item, ang nadiriya is contract of employment for a foreign employer. So meaning ang yung employer is outside the Philippines. But if ang iyang employer is a Philippine employer but he or she is assigned outside the country for a specific purpose, then dili siya ma-considered nga non-resident citizen even if ang iyahang residency dito is for at least 183 days. So kana siya makonsider yapon siya nga resident citizen. Pag ang iyahang employer is a Philippine employer. Next is a resident alien. Now, when we say resident alien class, it is considered as a foreigner, not a being that is outside, residing outside our world, or outside the world, outside this globe. So, ang pasabot sa alien kay mga foreigners, meaning katong mga dili mga citizens sa Philippines. Okay? So, when we say resident alien, it is an alien or foreigner staying in the Philippines for more than 1 year. So, usually, mo ni sila tong mga foreigners nga nakaasawa or nakabana og mga Filipino citizens who chooses to reside here in the Philippines for good. So, mo to sila, no? They already reside in the Philippines for more than 1 year. So, mo to sila ang considered as a resident alien. Next, non-resident alien, of course, that is very understandable. These are foreigner who stayed for less than 1 year. And there are two kinds of non-resident alien. So we have engaged in trade or business and not engaged in trade or business. So those who are coming here sa ato ang country with a purpose of engaging themselves in trade or business, then they are considered as non-resident alien engaged in trade or business. So, aside from that also, they stayed in the Philippines for more than 180 days in any calendar year. While non-resident alien not engaged in trade or business, of course, from the word itself, ang meaning niya, katong nianhi lang diri sa Philippines but not to engage in trade or business, or these are alien or foreigner who stays in the Philippines for an aggregate period not exceeding 180 days in any calendar year. Example ani katong mga pabalik-balik lang gani diri sa Philippines. Though magsige sila balik-balik diri, pero kung i-accumulate na to ilahang stay diri within the year, dili siya molampas og 180 days. Like say for example magbakasyon lang. Okay? So wala sila. Those are considered as non-resident alien not engaged in trade or business. We also have special aliens. So again, pag mangitag aliens, foreigner gihapon. But in this case, special aliens, this may be aliens or foreigner or also qualified Filipinos. But they are employed in a regional or area headquarters or regional operating headquarters of multinational companies. Meaning to say, this is a national companies based outside the country, based outside the Philippines, but they built a regional headquarters diri sa Philippines. Okay? And those employees employed in that particular regional area headquarters, ma-alien man or ma-Filipino citizen, they are considered as special aliens. Why is it they have a different classification? It is because naa sila'y lahi pud na method or mode of computing the taxes, or they have different tax rate. Okay, na sila'y mga special taxes for their income. Aside from this regional area headquarters, we also consider aliens and qualified employees as special alien if they are employed in an offshore banking units. Still, these are banks that is based outside the country, pero naa sila'y branch diri sa Philippines. and they transact using foreign currencies. So, moto sila ang offshore banking units. Then we also have petroleum service contractor or subcontractor. Still, this company are foreign-based companies, but they are operating within the Philippines. So again, kani nga mga na-mention nato na mga entities, type of entities that operates within the Philippines pero foreign country based sila, ang ilahang mga empleyado, ma-alien or ma-citizen in the Philippines are considered as special aliens. Next is mixed income earners. This refers to an individual that earns a compensation income, income from business or practice of profession, and other types of income. So from the word itself, mixed income earner. So this is an individual taxpayer that earns an income from different sources. Okay? So lahi-lahi og sources ang iyahang income. Then marginal income earner, this refers to an individual who don't have more than 100,000 pesos as gross sales or receipts for any 12 months period. So ang iyang annual income does not exceed 100,000 pesos. Then for an employee who is a minimum wage earner, so naatay kanang duha ka klase nga sector. We have private sector, those who pay the statutory minimum wage. So how much is the minimum wage? More likely nasa 300 plus sa ato ang area diri, nasa 300 plus ang minimum wage niya. Murag 340 man ata class. Murag ang latest na ako na naibalaan nga minimum wage in here sa Davao del Norte is 340 pesos. For public sector, those with income of not more than the statutory minimum wage earner in the non-agricultural sector where he is assigned. So rules for the minimum wage earner. So when you are a minimum wage earner, you are exempt in paying your income taxes. Then holiday pay, OT pay, or ND pay and hazard pay are likewise exempt from income taxes. MWE or minimum wage earner who receives taxable income in excess of the minimum wage will be taxed on the excess but will not lose his or her status as minimum wage earner. So say for example, if considered siya as minimum wage earner but there is a portion of his or her income that exceeds the range of a minimum wage, ang katong excess daw ato niya will be subject to tax. But despite of this situation, dili gihapon mawala daw yung status as minimum wage earner. Then receipt of other income during the year does not qualify or disqualify them as minimum wage earner. So if naa pa siya other income aside from the compensation nga iyang na-receive as with a minimum wage class, that situation will not disqualify daw sa iyaha to become a minimum wage earner. Still considered gyapon siya as a minimum wage earner. Then taxable income received not as minimum wage earner may be subjected to appropriate taxes. Next is senior citizens. These are resident citizens and must be at least 60 years old. So senior citizens are not exempt from income tax unless they are considered minimum wage earner. Ngano man, because there are still senior citizens that are able to earn income, like naayuban nga gi-extend pa sa ilahang duty ilahang work even though nga retired na sila, or basi naa pa sila other income. Diba usually pag mag-retire na naa sila retirement pay, no? So maybe they use their retirement pay for a future investment, like magnegosyo sila, and that business will earn income, of course. So katong income sa ilahang business will be subject to taxes. Then they are granted 20% discount from selected establishments. So one of the privilege or benefits of becoming a senior citizen is that when you go outside, you buy something, you eat something, then you will be able to avail a 20% discount. Now, discount granted to senior citizens are treated as tax deduction. Okay? On the part of the entity granting the discount to a senior citizen, sa ilahang part, that will be considered as tax deduction. Ang katong 20% discount. Next is sale of goods and services to senior citizens by selected establishments are exempt from VAT. Okay, so wala na VAT. So say for example, if the senior citizen avails the 20% discount, then on the other hand, those goods nga nabaligya sa senior citizens will no longer be subjected to value-added tax. Next is PWD, or persons with disabilities. They're also granted 20% discount to be claimed as deduction for businesses. So same with senior citizen nga customer. So kung napo tay customer nga PWD, our 20% discount given to them will be considered as deduction. So pwede na to siya ma-claim as deduction. So now let's proceed with the essential knowledge for the taxation of individuals. So first is we need to know the different kinds of individual taxpayer. For what reason, diri na to ma-determine unsa nga mga income ang i-include nato as part of the taxable income, or shall I say sources of taxable income. So again, magmatter ang kind sa individual taxpayer kung unsa ang ma-appeal sa taxable income sa taxpayer. When you say taxable income, these are the income of these taxpayers that are subject to tax. So the question is, naa di ay income nga dili subject to tax? Yes, naatay mga items nga dili subject to tax. So there are four kinds of individual taxpayer, 5 to be specific, kay ang isa ana kay napoy laylay nga classification. So una is a resident citizen. So pag may tag resident citizen, mo ni ang mga Filipino citizens that resides in the Philippines. So unsa man ang ma-appeal sa iyahang taxable income. So based on this table, all within and without nga income, within or without sources of income ni resident citizens are subject to tax or included in the taxable income. What do you mean by within? So pag mingon tag within, mo ni ang mga income that were earned inside the Philippines. Pero pag may tag without, these are income earned outside the Philippines. So pag resident citizen ka, all income earned within and outside the Philippines will be subject to tax. For non-resident citizen, only within. Okay, within lang ang mga tax, mga income earned. Same with resident alien, non-resident alien engaged in trade or business, and non-resident alien not engaged to trade or business. So within lang to sila tanan. For resident citizen again, all income within and without the Philippines. So we have a note here. So it is important to determine the source of income of an individual taxpayer, whether from the Philippines, within the Philippines, or without, because not all individual taxpayers are taxed on all their income as illustrated above. So, mo to kong gi-explain kaganiha, class. Next is sources of income. Okay? So, asa man or unsa man ang mga different sources of income sa mga individuals. Okay? So, there are three basic sources of income. So, first is the compensation income. So, if the individual is an employee or works in a company and receives a compensation or a wage, so kato iyahang na-receive is considered as compensation income. Okay? And the keyword here is there is an employer-employee relationship. Okay? Next is business income. So this arises from self-employment or practice of profession. This shall not include income from performance of services by the taxpayer as an employee. It is because, again, pag employee ka sa isa ka employer, ang imong tanang ma-receive ana is considered as a compensation income and not a business income. While we also have mixed income, so this is combination of compensation and business income. So you are both a compensation and business income earner. So these first three sources of income are considered as active income. So may pasabot sa active income, it means to say that these are income that derive from your effort of earning this income, like compensation. Of course, nag-effort man ka nga mo trabaho. So, gipaningkamutan nimo nga maka-income ka. The same with business income. But what is passive income? So, may pasabot sa passive income. So, opposite sa active. So, pag may yung tag-passive income, meaning we earned this income nga wala tayo buhat. Naglingkod-lingkod lang ta, naghulat lang ta nga moabot ng atuang income. Best example of that is the amount of interest earned from your deposit. 'Di ba? Nag-deposit lang ka sa bangko, no? And then wala lang kay gibuhat. But still nag-earn gihapon siya og interest. So katong interest nga na-earn ato is considered as passive income. Or another example is mag-invest ka sa shares of stocks. So, ikaw as investors in the shares of stocks, maghulat lang ka nga maka-receive og dividend. Wala kay gibuhat, wala kay effort nga gibuhat para maka-earn ka og dividend. Igo lang ka nag-invest. Okay? So, katong dividend nga na-receive nimo is considered as passive income. And passive income is subject to a separate and final tax. Separate siya sa katong active income because active income is subject to a graduated tax rate, meaning natay tax table ana. Okay? Magdepende ang taxes ana sa bracket sa iyahang income. But for passive income, it is subject to a final tax. Okay? Diretso na, kumbaga, diretso na nato siya i-multiply sa isa ka specific rate, then that will be the passive income. Tax on the passive income. So, these are taxed at fixed rates from 5 to 25%. So, fixed siya, class. Unlike sa katong graduated tax rate, magdepende ang imuhang tax rate sa imuhang income. So, those are applicable for the compensation, business, and mixed income. So, next source of income is capital gains. So, this will be discussed on a separate lesson. But before that, what do you mean by capital gains? So, money siya ang income nga imuhang na-earn arising from the sale of capital goods. So, in tax class, there are two kinds of capital goods, shares of stocks and real properties. Okay, for real properties, we have either land or building. So, mo lang na siya ato real property. While ang katong shares of stocks, katutong mga shares, mga equity shares nga imuhang gi-invest. Meaning, pag investor ka sa isa ka corporation, so pag ibaligya nimo siya, there will be capital gains tax. And Same pod sa real property. If makaginansya ka sa real property, sa pagbaligya sa real property, then you will be subject to capital gains tax. For capital gains from sale of shares of stocks not traded through local stock exchange, you will be taxed at 15% on the capital gains. For capital gains from sale of real property, you will be taxed at 6% on the fair market value or zonal value, whichever is higher. And again, this will be discussed separately on our future lessons. And last but not the least, another source of income for an individual taxpayer is a fringe benefit. So, maning fringe benefit. So, these are benefits furnished or granted by an employer in cash or in kind in addition to basic salary. So, again, these are benefits but are not considered as compensation class that were granted to the employee, or that were granted by the employer to its employee in cash or in kind to an individual employee under an employee and employer relationship. So gigrant sa iyaha aside sa katong basic salaries. Example, uniform allowances. Okay? Mga uniform allowances, mga converted sick leave, converted vacation leave, ganing mga wala nagamit ng mga leave credits nga na-convert into cash, those are considered as fringe benefits, and this will be subjected to a certain tax. So, natin ginatawag nga fringe benefit tax. And again, this will be discussed on a separate lesson. So in this video lecture, we will be focusing on the compensation income, business income, mixed income, and passive income alone. So let's have the active income. So again, we have three kinds of active income: compensation, business or professional income, and then we also have mixed income, earner nga taxpayer. So, formats of computation for the taxable income and tax due. Okay? So, this is for the compensation income earner. So, for compensation income earner, we will start with the gross compensation income. So, pila to iyahang gross compensation income, iles lang nato ning mga deduction. Okay, mga non-taxable deduction. So, we have SSS or GSIS contribution, pag-ibig contributions, PhilHealth contributions, and union dues. So, katulad sila tanan ang mga pwede ipang-deduct sa gross compensation income. Then, after that, we will have the taxable compensation income. So, this taxable compensation income will be subject to tax. So, dari na ta mag-base sa iyahang tax due. So, tax due, so mo to siya, no, based on the graduated tax rate, ma-determine nato iyahang tax due. And from this, iles lang nato tong tax withheld on compensation and foreign tax credit. Okay? So, iles lang to sila, that will be the tax payable. So, what do you mean by this one, class? Tax withheld on compensation. So, mo ni siya ang gina-withheld sa employer in advance for each month or for each month of the employee's compensation. So, every month, naga-withheld na siya si employer og income taxes. And then, that amount withheld will be paid to the BIR, to the collecting agents in the internal revenue. Okay? So, after deducting those tax withheld and foreign tax credit, then that would be the tax payable or overpayment. So, pag tax payable, ang employee karon is mabayad pa og additional na taxes. Pag overpayment, the overpayment may be refunded to the employee. Okay? For pure business or professional income earners, so this is how we compute the taxable income and tax due. So we will start with the gross business or professional income less allowable income. So kani nga mga deductions later on ma-discuss nato ni in our next slides. Ma-discuss nato unsa to mga allowable deductions for a business or professional income earner. So ilas lang nato na siya mga allowable deductions, then that will be the taxable net income. So tax due, okay? So ang tax due magdepende sa tax rate niya. For the business or professional income earner class, there are two ways to tax the income of a business or professional income earner. That could be, they may choose the graduated rates, katong from 0 to 35% nga graduated rates, or 8% income tax rate. So again, the taxpayer may opt to choose the graduated tax rate or the 8% income tax rate. And then the tax base for the graduated tax rate, kung graduated tax rate ang gamiton, magamit ta or dito ta magbase sa taxable income. So kani. So kung may taxable income, that is gross business or professional income less allowable deductions. While if the taxpayer opted to choose 8% income tax rate, so the tax base is the gross sales or receipts to be reduced by 250,000. So may pasabot sa gross sales or receipts. So pag may gross sales or receipts, this excludes the cost of goods sold. So meaning wala pa na minus ang cost of goods sold. Katod yun mismo diretso sa sales niya. Wala pa na deduct ang cost of goods sold. And this should be reduced by 250,000. Why 250,000? Because according to train law, okay, first 250,000 income of the income taxpayer should not be subject to tax. So meaning, kung ang imuhang income is ni sobra sa 250,000, ang computan lang nato og tax ana is katulang nag-exceed sa 250,000. Kaya ang first 250,000 sa imong income will not be subject to tax. Okay? So mana siya, timan-an na siya. There are two tax rate available to this business income earner. We have graduated and the 8% income tax rate. So, balik ta diri sa tax due. So, if we already computed the tax due, i-deduct lang nato ang tax credits or payment from prior years, excess credits, and tax payments for the previous quarters, and creditable tax withheld. That would be the tax payable or overpayment. So, rules on availing 8% tax rate. So, kinsa man tong pwede makagamit sa 8% tax rate. Baingat ta kaganiha that business or professional income tax payer may opt to choose the graduated tax rate or the 8% tax rate. So, kanus aman siya pwede maka-avail og 8% tax rate. If the gross sales or receipts does not exceed the VAT threshold of 3 million. Or in short, the taxpayer is not VAT registered. Okay? Not a VAT taxpayer. Meaning, dili siya nagabayad og VAT. Now, if the taxpayer is a VAT registered, then dili siya pwede makagamit sa 8%. Meaning to say, graduated tax rate iyahang gamiton. Then, taxpayer must signify his intention to avail of the 8% tax rate in the first quarter of the tax return. If not, he is deemed to have chosen the graduated tax rate. So, if in case qualified siya, no? So, qualified siya if dili siya VAT registered. Now, if qualified siya, dapat magpahibalo daw siya sa intention to choose the 8% tax rate kanusa on the first quarter of the tax return. Now, when we file our income tax return class, we file it every quarter. So, kung business income earner ta, naga-file ta og quarterly income tax return. So, pag first quarter pa lang daan, magpahibalo na siya nga 8% tax rate ang iyahang pilion. Okay? The first 250,000 is not subject to tax since what is tax is the excess or is in excess of 250,000. This 250,000 bonus is not available to mixed income earners. Nganon dili man siya available. Later on, I will explain to you nganon dili siya available pag mixed income earner. So, 8% not available to the following. So, kinsa man tong dili pwede maka-avail og 8% if purely compensation income earner siya. Ang compensation income earner graduated lang gyud as I've mentioned earlier. Katong formats of computation for compensation income. Dili sila pwede or they're not given the right to choose the 8% nga tax rate. Next is VAT registered taxpayer, non-VAT registered taxpayer whose gross sales or receipts exceeds the 3 million VAT threshold. Usually class pag ang atuang sales is moabot na og 3 million, ma-considered na ta automatically og VAT registered or VAT taxpayer. So if in case nga imuhang gross receipts or sales is below 3 million, then non-VAT ka ana. But in such a case, if you are a non-VAT registered pero ning exceed ang imuhang gross sales or receipts for the year og 3 million, then dili na ka pwede ana mag 8% because you will switch from non-VAT to a VAT registered. Next, taxpayer subject to OPT or other percentage tax, partners of a GPP or a general professional partnership. Okay, so may mga kuanan partnership siya pero ang purpose for the partnership is performance of the or practice of the profession. So dili pwede ang 8%. Next is individuals enjoying tax exemptions. Okay, katong mga tax exemptions, dili sila pwede maka-avail og 8% tax rate. So, for mixed income earner, okay, so for mixed income earner, there are two kinds of income here. We have the compensation and the business income. So, what will happen if since business income siya, no? So ang taxpayer ani if the taxpayer opt to choose graduated tax rate for his or her business income, then pwede ra nato sila isagol ang compensation income and business income. Isahon na nato pag-compute ilahang tax due kay isa lang man ang gamiton nga graduated tax rate. Okay? Again, if the taxpayer opt to choose the graduated tax rate for his or her business income, then pwede ra nato siya i-combine sa compensation income in computing the taxable income and the tax due. The same lang gihapon nag-process. Gross compensation income plus ang net income niya sa business, that will be the total taxable income. And this total taxable income will be subject to tax based on a graduated tax rates. So we have the tax due, mo na iyahang income tax, then less the deductions. Okay, mga deductions niya, then that will be the taxable or tax payable or the overpayment. Now, what if the business income earner chose the 8% discount? 8% tax rate. So, pag in-anak class, separate atong computation sa compensation and business income tax. For compensation, you will use the graduated tax rate, while the business income, you will use the 8% tax rate. Okay? Now, as I've mentioned earlier, natoy na note dari Okay. This 250,000 bonus is not available to mixed income earners. Now, if mixed income earner ka, and then sa imong business income nga portion nagamit ka og 8%, 'di ba kaganiha pag pure business income lang ka, from your business income, 'di ba ang basis sa 8% 8% tax rate is the gross receipts, right? So pag imo ang gross receipts or sales, minusan nimo siya og 250,000 una, or shall I say, when you get the 8% tax due of your gross receipts, bawasi usa og 250,000 ang imong gross receipts, or the first 250,000 will not be subject to the 8% tax rate. Pero pag mixed income earner ka, ang katong business income nimo will no longer be entitled to a free or a bonus of 250,000 nga reduction. Why? It is because it is already claimed in your compensation income. Okay? Take note, kaisa lang nimo siya pwede maklaim ang 250,000 nga reduction. Kung ang 250,000 na-deduct na siya or na-consider na siya sa compensation income, then sa imuhang business income, dili na siya ma-consider. Okay? Pag 8% ang imuhang gamiton. Pero pag graduated rates, dili na pod kay gi-combine naman ang imuhang compensation and business income as one. And then isa lang pod ka 250,000 nga reduction ang nagamit or na-apply. Okay? So, mao to siya ang explanation class. Again, pag 8% ang imong gigamit for business income, and then you also have a compensation income, dili na nimo mag-claim ang 250,000 nga reduction sa imong business income because it is already applied to your compensation income. Okay? So, that is for the mixed income earner. Next is for the passive income. Okay, so these are the common examples of passive income class. We have royalties on LBM. When you say LBM, literary, books, and music. Okay, so kung ikaw kanang you are an author of a book, then you will be receiving a royalty ana. Okay? So, katong royalty income nimo is considered as passive income and therefore subject to a final tax rate. Next is interest income on bank deposits. So, kung naa kay deposit sa bank, then mag-accrue siyag interest, then those interest income earned will be subject to passive income tax. Then, lotto winnings and prizes. Kung nakadaog ka sa mga amateur contest or sa TV, kanang reality show sa TV, mga contest sa TV, those are subject to final tax. And also lotto winnings. Okay, so this one, these are the income tax, final tax rates for different passive income for both resident citizens and non-resident citizens engaged in trade or business. Again, so kani sila nga mga tax rates on a specific passive income are already applicable to resident citizens or non-resident citizens or resident aliens and non-resident aliens engaged in trade or business. Again, for resident citizens, non-resident citizens, and resident alien and non-resident alien engaged in trade or business. So for interest income from any currency bank deposits, 20%. Yield or any other monetary benefits from deposit substitute, 20%, like mga time deposits. Yield or any monetary benefit from trust funds and similar arrangements, 20%. Royalties in general, 20%. Pag general siya nga royalties, 20%. But if it is specific on books, as well as literary works and musical composition, 10% lang. Okay? So other than this mentioned royalties will be 20%. Prizes. Okay? Prizes, except prizes amounting to 10% or less, which shall be subject to tax under graduated tax rate. So kung ang iyahang prize is below or 10,000 below, it will not be subject to 20% na final tax. Instead, ma-appeal siya dito sa imuhang taxable income subject to graduated tax rate. Okay, again, in general, pag nakay prices nga nadawat, 20%. But if the price is amounting to 10,000 or less, meaning 10,000 pababa, okay, kato siya nga price will not be subject to 20% nga final tax. Instead, ma-appeal siya dito sa imong taxable income and subject to graduated tax rate. Then, Philippine Charity Sweepstakes Office, 10,000 or less will be exempted. Pero pag more than 10,000 na, basic tax na siya. Okay, so there will be a specific tax rate for this one. Next, for non-resident alien. Okay, non-resident alien not engaged in trade or business. So, tanang mga na-mention nato kaganiha in the previous slide with different tax rate, karon same lang, uniform siya, which is 25%. Tanang passive income ni non-resident alien within the Philippines, take note how within the Philippines will be subject to 25% tax rate. Final tax. Okay, may I go back? Okay, kani siya 20%, mga 20%, 10%, and so on. Mag-apply gihapon diri kato ganing kinds of individual taxpayer kung unsa ang sources sa ilahang income. So if ang income is if the taxpayer is a resident citizen, okay, if a resident citizen, all passive income within and outside or coming from the Philippines or outside the Philippines will be subject to these final taxes. Pero ang para sa mga resident alien, non-resident citizen, and non-resident alien engaged in trade or business, only income within the Philippines lang. Only passive income within the Philippines ang subject aning final taxes. Okay, mag-apply gihapon tong sources of taxable income. Kung within ba or without. Okay. Now, with this one, other passive income gihapon, pero lahi na no, ang resident and citizen, appeal na diri atong first three. Resident citizen, non-resident citizen, and resident alien. And another classification, non-resident alien engaged in trade or business and not engaged in trade or business. For interest income received from a depository bank under expanded foreign currency deposit system, for residents and citizens, 15%, but for non-resident aliens, they are exempted. Interest income from long-term deposits or investments evidenced by certificates prescribed by BSP, exempted ang resident and citizens and NRA ETB, while the NRA and ETB are subject to 25% final tax. Kani pag long term, okay? Pag long term siya, how do we say nga long term siya? This is more than 5 years. Okay? Pag more than 5 years na iyahang deposit. Okay? Long term. Tama, long term. More than 1 year. Okay? Next is pre-terminated before 5th year. Okay? Before 5th year daw sa iyahang maturity, a final tax shall be imposed based on the remaining maturity. Like say for example, if kato siya nga long-term deposit was pre-terminated prior to its 5th year. Okay, so iyang first 5 years. Prior to its first 5 years, so this will be subjected to a separate final tax. If ang iyahang remaining maturity is 4 years or less than 5 years, then ang iyahang tax rate for residents and citizens and NRA ETB is 5%, while the NRA and ETB is always 25%. If ang iyang remaining maturity is 3 years or less than 4 years, then 12% for the first two, while NRA and ETB is 25%. And if less than 3 years na lang ang iyahang remaining maturity, then ang iyahang tax rate is 20% and 20% for residents and citizens and NRA ETB, while 25% for NRA and ETB. Okay, so ang timaan lang ninyo class is kaning mga tax rate. Okay, timaan nato ng mga tax rate bilang applicable nga tax rate for each kinds of individual taxpayers. Another, okay, in continuation, this is for cash or property dividends. So say for example, ang kaning mga individuals kay shareholders sa isa ka company that is not listed in the local stock exchange, then napod sila corresponding tax rate, final tax for their dividends, whether it is a cash or property dividend received. For cash and or property dividends actually or constructively received from a domestic corporation, okay, or from joint stock company, insurance or mutual funds company, and regional operating headquarters of a multinationals, then ang ilahang tax rates kay 10%, 20%, 25% respectively. Okay, so take note ha, domestic corporations. Okay, so domestic corporations lang. Next, for foreign corporations, dili siya subject to a final tax, especially for a resident citizen kay, di ba, within and without man nga sources ang appeal sa iyahang ang taxable sa iyaha. So what will happen to the dividends received by a resident citizen from a foreign corporation? It will not be subject to a 10% final tax. Instead, it will be part in its taxable income graduated based on or subject to graduated final taxes. So katong graduated final tax siya, taxable income subject to graduated final rates. Graduated final rates. Graduated tax rates. Next is share on an individual in the distributable net income after tax of a partnership other than a GPP or a general professional partnership of which he is a partner. So katong iyahang amount or katong iyahang na-receive as a share in the profit of the partnership aside from a GPP. So ang ilahang final tax will be 10%, 20%, and 25% respectively. And share of an individual in the net income after tax of an association or joint account or a joint venture or a consortium, ang iyahang final tax for that will be 10%, 20%, and 25% respectively. Okay? So, moto siya ang mga different tax rates for the passive income. Again, for passive income, this is subject to final tax rate. So, kung sa man nga tax rate, magdepende sa kung sa nga klase nga passive income. All passive income abroad earned by a resident citizen shall be subject to regular tax or taxed under Section 24A or the graduated tax rate. Okay. So next is capital gains tax. An overview lang sa capital gains tax. So mo ni siya ang mga tax rates, no? As I've mentioned, there are two kinds of capital gains for a taxpayer. We have share sales tax and sale from the real property. That would be for land and buildings only. For shares of stocks, if the sale of the shares of stocks is not traded in the stock exchange, then the rate is 15% of the net capital gains. But if the shares are listed in the stock exchange, then the stock transaction tax will be 6/10 of 1% or 0.006% of GSP or gross selling price or gross value in money of the shares of stocks. Then real property, for sale of real property in the Philippines held as capital asset, we have 6% of the gross selling price or the market value, capital market value, whichever is higher. And then for sale made to government or to GOCCs, kung ang imuhang property is nahalin siya sa isa ka government agency or to a GOCC, government-owned corporation, the taxpayer may choose either 6% or graduated tax rate. So, pwede siya magamit o graduated tax rate or 6% nga capital gains tax. Okay. So, earlier in the business income or professional income, we've mentioned there that from the gross income, gross business income or professional income, deduct lang ang mga allowable deduction to get the taxable income. Now, what are those allowable deductions? So, there are two kinds of allowable deductions for a business income or professional income. So, these are the itemized deduction and the optional standard deduction or OSD. So, unsa man na silang duha ka deductions. So, deductions, these are items or amounts which the law allows to be deducted from the gross income in order to arrive at the taxable income. So, again, these are the amount of deductions allowed to be deducted. Deductions from gross income from business will be discussed in a separate lesson. But for now, let's have an overview on this deduction. So, for individuals, not purely compensation earners, meaning business income earners sila, or pwede sila mix, kay tungod na pod sila ay business income, may claim deductions in two ways. So these are itemized deduction and OSD or the optional standard deduction. So itemized deduction meaning whatever the expenses that your business incurred, pwede siya ma-claim as deduction, itemized nimo siya ibutang, but subject to certain conditions. Next is optional standard deduction, meaning from the word itself standard, there is a standard amount that will be allowed to deduct. Okay, but this is optional. Okay, again, the taxpayer may opt to choose either itemized deduction or optional standard deduction. So now we will discuss on the optional standard deduction. So, kinsa man ang pwede nga maka-claim sa optional standard deduction. So, the following may be allowed to claim OSD in lieu of the itemized deduction. For individuals, that could be resident citizens, non-resident citizens, resident aliens, and taxable estates and trusts. So, if you notice here, walay non-resident alien. Only resident citizens, non-resident citizens, and resident alien lang ang pwede maka-avail og OSD. On the other hand, for corporation taxpayers, both the domestic corporations and the resident foreign corporations may allow to claim OSD. So determination of the amount of OSD for the individuals. Okay, for the individuals, pila man ang amount sa OSD. Now, the OSD allowed to individual taxpayers shall be a maximum of 40% of the gross sales if on accrual basis and gross receipts on a cash basis during the taxable year. So take note, standard na siya daan nga 40% of either gross sales or gross receipts. Meaning, pag may gross sales and gross receipts, katong wala pa na minus ang mga mga cost of goods sold or cost of services. Okay? The cost of sales in the case of individual seller of goods or the cost of services in the case of individual seller of services are not allowed to be deducted for purposes of determining the basis of the OSD. Okay, again, pag OSD mo gamiton, dito mata magbase sa gross sales and gross receipts. For other individual taxpayers allowed by law to report their income and deductions under a different method of accounting other than cash or accrual method of accounting, the gross sales or gross receipts shall be determined in accordance with said acceptable method. Okay, so timaan na siya ha, 40% of gross receipts or gross sales ang OSD. Okay, for the tax rates, okay, na-mention naman nato gani ang mga final taxes, no? Like say for example, for business income earner, pwede siya mag 8% or the graduated tax rate. For the passive income, naatay mga final taxes ranging from 5% to 25%. Now, unsa may mga taxes nato in a graduated tax rate under the train law. Okay? So, mo ni siya ang tax rate nato, class, magdepende sa range sa imuhang income. So, if your income is 250,000 or below, of course, you will not be subjected to tax. So, 0% ang imuhang tax rate. Pero kung imuhang income, for your income, exceeding 250,000 but less than 400,000, this will be subject to 20% in excess of the 250,000. Okay? If your income is from 400,000 to 800,000, you will have a tax due of 30,000 plus 25% of the excess. Okay, of the excess over 400,000. And for 800,000 and 2 million income, first 130,000 plus 30% of the excess over 800,000. And for 2 million to 8 million, 490,000 plus 32% of the excess over 2 million. And for income over 8 million, that will be ranging from 2,410,000 plus 35% of the excess over 8 million. So that is for the graduated tax rate. Now, we will apply this one in our subsequent illustrations. Okay, now let's have the illustration. So let us apply all the basic concepts of taxation for individuals that I have discussed to you in my previous slides. Okay, so this is for the illustration one. This is an example for a compensation income earner. Okay, pure compensation lang siya. So Mr. Adrian F., the taxpayer, is married with 6 qualified dependent children. Taxable year is 2019. The following data are available. Gross compensation, 540,000. Premium payment on insurance, 10,000. So compute the taxable income and tax due if Mr. Adrian is a resident citizen. So since compensation earner man siya, it will be subjected to graduated tax rate. But before that, pila man ang taxable income niya. So, ang taxable income will be, of course, iyahang total compensation. Okay? Total compensation niya, since wala man tay mga allowable deductions such as SSS contribution, PhilHealth, Pag-ibig, and Union dues. So, the 540,000 will be subject to tax. But based on the table, pila man ang iyahang tax due. So, ang 540 is ranging from 400,000 to 800,000 na income. So, ang iyahang tax due will be 30,000 for the first 400,000 and 25% in excess of 400,000. So, that would be for 400,000, 30,000, and then ang excess sa 400,000 niya, or excess of 540 over the 400,000 nga threshold is 140,000 will be subject to 25% nga tax rate. So, 25% tax rate of 140, that is 35,000. So, total tax due is 65,000. Okay? Now, we have a note here. Since RA 10963 or the train law has amended the basic exemption, additional exemption, and premium payment as allowable deductions for individual taxation, gross compensation income will automatically be the taxable income for purely compensation income earner. Now, take note, pag may tag-train law, it was just effective last January 1, 2018 pa. So, prior to January 1, 2018, prior to the train law, there was a different way of computing for the taxable income, wherein from gross compensation income, we will allow the taxpayer to avail the personal deduction niya, and then the additional deduction. Personal deduction is 50,000. So, tutuol na siya na mga taxpayer, maski unsa pa ka nga kind of taxpayer. So, 50,000. Plus, additional taxpayer of 25,000 each dependent. Maximum of 4 dependents. 4 qualified dependents. So, maximum of 100,000 ang imuhang additional exemptions. Okay, so personal exemption is 50,000 plus additional exemptions of 100,000. And then aside from that is katong premium payments on health insurances, but mo maximum lang siya og 2,400 per year. So, inana lang siya. Mo lang na ang maximum nga deduction for the premium payments for health insurance before the train law. But on the train law, gitanggal na to siya ng mga exemptions, and then lahi na po ang iyahang graduated tax rate. Ang nakaiba lang, ang first 250,000 karon under train law will be considered as exemptions of the taxpayer. So, kung ang imuhang income, imuhang sweldo for the whole year, wala ka niabot o 250,000, then you will not pay taxes, or you will be exempted from paying taxes. Kaya wala man kaabot og 250,000. Okay? So, that is for the illustration number 1. So, next illustration, still an individual, pero business income earner siya. Okay? Mr. Antonio F. married and had the following data for the taxable year 2019. Gross income in the Philippines, gross income for United States as stated in the illustration, expenses in the Philippines and expenses in United States. Now, compute for the taxable income and tax due using itemized deduction if Mr. Antonio is a resident citizen using graduated tax rate and 8% tax rate. Okay? So, duha ka situation ani. We will compute for the tax due using graduated tax rate and 8%. And Mr. Antonio is a resident citizen. So, therefore, tanang income niya and expenses within and without the Philippines will be included. So, this is how we get the taxable income. So, for gross business income, Philippine income niya, gross income, and plus United States nga gross income niya for a total of 1,970,731 less the allowable deduction. So since business income siya, naa siya allowable deduction, and the taxpayer opt to choose the itemized deduction. So katong expenses nga na-mention nato, those are considered as the itemized deduction. So both Philippines and United States for a total of 913,618. Therefore, the taxable income is 1,057,113. So this will be subject to graduated tax table. So kani siya nabilong siya sa range na 800 to 2 million. So meaning 130,000 plus 30% of the excess over 800,000. So let's see. For the first 800,000, 130,000, and then 30% of the excess. So ang excess is 257,113 times 30%. That will be 77,134. So total tax due using graduated tax rate is 207,134. Now, how about 8%? So, ang 8% is magbase sa gross sales. Okay? So, gross sales niya. So, how much is the gross sales? So, assuming that the gross sales is 2 million and 750 million for both Philippines and United States nga sources respectively. Okay? So, pila man ang iyahang tax due? Why do we have a separate gross sales? Why not the gross income? Like as we've mentioned there is atong given, kani sila gross income. Okay? Bakit dili sila ang atong gigamit? Kay tungod, pag 8% atong gamiton, dito ta magbase or our tax base will be the gross sales or gross receipts. So we need to determine another gross receipts or gross sales. Kay mo to'y subject sa 8% preferential tax rate. So gross sales niya around the world is 2,750,000 less exemption. Okay? Take note, pag pure business income earner siya, pwede siya or allowed siya into 250,000 nga exemption. So, ang gideduct na to is the exemption and not the deduction. Okay? So, exemption lang 250,000. So, ang taxable income niya is 2.5 million. So, diri ta magbase sa 8%. So, times 8%, the tax due of Mr. Antonio is 200,000. Okay, again, pag 8% na itong gamiton, we will be using the gross sales or gross receipts, not the gross income. Kaya kung mo ingon tag gross income, deducted na dira ang cost of sales or cost of services. Okay, another illustration, but we'll be using the same problem. Okay, so what if daw non-resident citizen, resident alien, or non-resident alien engaged to trade and business? Okay, what if kato daw siya? So pag kani nga tulo ka kinds of taxpayer, the same lang ni sila og computation class. Okay, pero again, since dili sila resident citizen, no? So only only income coming from within the Philippines or earned within the Philippines will be subject to tax or subject to graduated tax rate. Okay? So Philippines lang gross business income and Philippines lang pod nga deduction. So, taxable income is 969,113. Again, for non-resident citizen, resident alien, and non-resident alien engaged to trade and business will only be taxed for those income within or earned within the Philippines only. So, if this is the taxable income, the tax due will be, or the graduated tax rate will be based on the range 800,000 to 2 million, wherein the first 800,000 will be subject to 130,000 nga tax, and then the remaining or the excess will be subject to 30%. So therefore, ang tax due nila as non-resident citizen, resident alien, and non-resident alien engaged into trade or business is 180,734. Okay? So, mo na siya. So, another question with the same problem. Assuming daw nga ang taxpayer is a non-resident alien not engaged into trade or business. So, pag inana ang case class, pag NRA, NETB siya, that taxpayer will no longer be entitled for a deduction. Okay? Dili na siya maka-claim og any deduction, unlike sa mga non-resident alien, non-resident citizen and resident alien and non-resident alien engaged into trade or business. They are still allowed to claim for deduction, but again within lang nga mga deductions. But for NRA, NETB, they will be directly subject to a final tax. Okay, take note, final tax of 25% on their gross business income in the Philippines. Okay? Ang nakalahi ni NRA, NETB sa uban, again, dili na siya maka-claim og taxes. Okay? At taxes, deduction. Okay? Mga expenses, mga itemized deduction. And then, ang iya pong tax rate is fixed tax rate, which is 25%. So, dili siya applicable sa graduated tax rate. So, applicable siya sa 25% na fixed tax rate. Okay? So, mo na siya. Timan-an na siya, class. Okay. Next illustration. Business income earner gihapon siya, pero ang iyahang choice is to use the optional standard deduction as the deduction in computing the taxable income. So, for Mr. Cade, had the following in 2019. We have the sales, cost of sales, administrative expenses, selling expenses, other taxable income from operations, other non-operating income, passive income, net of final taxes. Now, compute for the taxable income and tax due, assuming that the taxpayer opted the optional standard deduction. So, step 1, compute the optional standard deduction. So, pila man. Again, the optional standard deduction of 40% will be based on the gross sales, the total gross sales or total gross receipts, not the gross income. Okay? So, pila man iyahang total sales, revenues, or receipts. That will be sales of 3.4 million plus other taxable income from operations not subject to final taxes. So, appeal na siya sa gross as a total revenue. So, total revenue is 3,520,000 times the 40% OSD rate. So, yung optional standard deduction is 1,408,000. So, mo na siya. Note that revenues or receipts arising from incidental or secondary operations of business or profession are added in computing the total sales, revenue, or receipts as basis for computing OSD. So, tanang other income. Okay? Other income ni entity. Okay? Other income ni entity or other taxable income ni business will be included as the basis for the OSD or optional standard deduction. Okay. So next, compute for the taxable income. So pila man ang taxable income? So we will start with the total revenue, which is 3.5 million or 3,520,000. And take note, we will no longer deduct the cost of services. Kaya nagamit naman taog OSD. So, i-add lang nato ang non-operating income nga 80,000. So, total gross income is 3,600,000. And then, less the optional standard deduction as computed earlier, 1,408,000. So, taxable income is 2,192,000. So, this one is within the range of 2 million to 8 million na bracket nato in the graduated tax rate. So, ang iyahang tax due will be 490,000 for the first 2 million, and the excess over the 2 million will be subject to 32%. So, nana siya 490 taan, and then the excess nga 192,000 times lang nato 32%, so we have 61,440. Therefore, the total tax due is 551,440. Note, for the basis of computing the taxable income under optional standard deduction, cost of service can no longer be claimed. But if including all other itemized expenses. Diba na-mention kaganihan no, sa given na siya administrative expenses, selling expenses, kana sila, madisregard na sila if magamit taog OSD. Pero pag itemized deduction, ma-appeal na sila og apply or ma-deduct na to na sila. Okay. So, next, illustration. So, Henry, resident citizen, married without dependent, had the following income in the Philippines. So, gross compensation, 580. Gross sales, 2 million. Cost of sales, 750,000. Itemized business expenses, 780,000. Royalties on books, 100,000. Domestic dividends, 50,000. So, compute for the tax due using graduated rates, and then tax due using 8% preferential tax, and last but not the least, the final taxes. So, sa may mga final, sa mga income subject to final taxes, diri katong mga passive income. So, sa may mga passive income diri so we have royalties and domestic dividends. So, let's start. So, using the graduated rates. So, take note, si taxpayer is a mixed income earner, na siya compensation and business income. So, pag magamit siya graduated tax rate, pwede rin nato sila usahon. I-combine nato ang compensation and the gross business income. So, the compensation is 580. The gross business income is 1,250,000. That is 2 million nga gross sales less cost of sales niya nga 750,000. So, gross income is 1,250,000. And let's assume that the business or the taxpayer opt to choose the itemized deduction. So, we'll be using the itemized expenses niya nga 780,000. So, net income niya sa business is 470,000. I-add lang nato sa compensation income nga 580,000. Then, our taxable income combined is 1,050,000. So, the 1,050,000 will be subject to graduated tax rate, and it belongs to the bracket nga 800,000 to 2 million. So, first, 800,000 will have a tax due of 130,000 plus 30% over or of the excess over 800,000. So the total tax due for the taxable income 1,050,000 is 205,000. So mao na iyahang tax due using graduated tax rate. Next is using preferential tax rate. So pag mixed income earner ka, your compensation will actually be using graduated, but your imuhang business income will be subject to 8% nga tax rate. Okay? So there is ata sa taxable income. For taxable income, we have 580,000. So this is subject to graduated tax rate. So this belongs to the first 400 to 800,000 nga bracket. So ang first 400 na ay 30,000 nga tax due, and the excess will be subject to 25% tax rate. So that is 45,000. So total tax due on the compensation income is 75,000. While for the business income, since magamit tawag 8% nga preferential tax, so ang 8% will be based on the gross sales and not on the gross income. And it will no longer be allowed to apply 250,000 nga exemption. Kaya kuan naman siya, na-apply na siya sa taxable compensation income. So, diretso ta 8% multiply sa gross sales, 2 million. So, iyahang preferential tax is 160,000. So, total tax due is 235,000. Again take note that in the taxable income for business income class, wala na ta nag-deduct sa 250,000. It is because it is already claimed or applied in the compensation income. Okay, kaisa lang na siya i-claim for a mixed income earner. And last but not the least, the final taxes. For royalties, ang royalties is subject to 10% if from LBM siya, literary works, books, and musical composition. Pero pag royalties in general, that will be subject to 20% final tax. Kani siya, royalties on books man daw, so 10%. So 10% sa 100,000, that is 10,000. For domestic dividends, so kato ni mga share, kato ning cash or property dividend received from a domestic corporation, so si taxpayer will be subject to 10%. Okay, 10% nga final tax. So tax niya is 5,000. So total final tax is 15,000. Okay? So, we have a notes here. For married individuals, the husband and wife shall compute separately the tax due on their respective taxable income. If any income cannot be definitely attributed to or identified as income exclusively earned or realized by either of the spouses, the same shall be divided equally between the spouses for the purposes of determining their respective taxable income. So meaning, if the husband and wife are both income earners, they must pay their respective taxes separately. So mag-file sila og separate income tax return. But in such a case, naay mga income nga dili ma-identify directly kung kinsa to siya nga income sa husband ba or sa wife, such income shall be divided equally to both husband and wife. Okay? So i-divide siya kay para fair siya nga ma-claim siya both sa husband and sa wife. In computing for the taxable income, fraction of a peso is disregarded. For the tax due, a fraction amounting to 50 centavos or more is rounded off to a peso, while a fraction amounting to 50 centavos is disregarded. So, pag mag-compute og taxable income, we will exclude any decimal places or any centavos. Wala sa ato ang return, sa ato ang income tax return, we will not include there, or we will not write in our return amounts with centavos. Dapat whole amount yun sila. But for tax due, pwede siya. Okay? Ano lang, if na ay decimal or if na ay centavo amounting to 50 centavos or more, okay? Pag ang iyang centavos is from 50 and above, considered na siya as 1 peso. Okay? So, i-round off siya into 1 peso. Pero pag ang iyang fraction is less than 50 centavos, so, i-round down din mo siya. Okay? Like say, for example, kung ang tax due is 109.23, so, ang tax due ana will be 109. Kaya ang centavos is 0.23 lang man. So, mubaba ka ana. Okay? Or i-disregard daw nimo ang centavo. Pero pag ang imuhang tax due is 109.65, then it will become 110. Kaya nag-round up ka into 1 peso. Okay? So, mo na siya ang rule. Next, creditable withholding tax withheld from income and or tax credit is deducted from the tax due. Penalties, if any, shall be added to the tax due. So, pag naay mga na-withheld na or na-withheld na taxes, i-minus siya sa tax due to get the tax payable or the tax refundable. Okay. Now, let's have the return and payment of taxes. So, may mga timan-an nato when filing returns and payment of the taxes. So, when you say return class, mo na siya ato ang report, kumbaga sa BIR, on the amount of the income that we earned and the tax due that we are going to pay. So, document na siya nga nagpamatuod nga kita na atay income and then magbayad ta og taxes. Okay? So, mo na siya ang return. So, for return and payment of taxes, withholding agents must file a return and pay to authorized agent, bank, revenue district officer, collecting agents, and duly authorized treasurer of the city or municipality where he resides or has his principal place of business. So, kani mga withholding agents, sila to mga mag-withheld sa imuhang income. Examples of the withholding agents. For a compensation income earner, your employer is considered as the withholding agent. So, every monthly sweldo nato, naga-withheld na sila o corresponding income tax sa atoa. Okay? And that withheld income tax will be paid, of course, to the BIR. Okay? Tanang mga income nato, tanang mga naga-provide sa atong income are considered as withholding agents because they are obliged to withheld portion of our income. Okay? What is the essence of withholding taxes class? Kumbaga, mauna siya ato ang advance payment sa ato ang taxes. Okay? Kaya kumbaga, ang BIR maniguro. Nga kita, income earner ta, maniguro si BIR nga mobayad yun ta sa ato ang taxes. Maunang mukuha daan or mo-withheld daan si BIR sa ato og taxes out of our income earned. Okay? Mauna siya. Mag-withheld ang withholding agents. But again, the withholding agents will remit that one or pay that one to this to the above mentioned na mga agencies. Taxes must be maintained in a separate account and not commingled with any other funds of the withholding agents. When to file and pay taxes withheld at source must not be later than the last day of the month following the close of the quarter during which the withholding was made. So, this is applicable for the withholding agents, ha? nga dapat mag-file sila and magbayad sa giwithheld nila nga taxes not later than the last day of the month following the close of the quarter during which the withholding was made. Say for example, the withholding happened on the first quarter. Usually atong first quarter is March mag-end. So dapat mag-file ka and mag-pay ka sa giwithheld nimo nga taxes on the last day of April. Okay? It should not be later than the last day of April. Kaya ano man daw, the month following the close of the quarter. So following sa March, that is April. So ang imuhang deadline ana will be April 31. Next, withholding of wages. So this applies to all employed individuals, whether citizens or aliens, deriving income from compensation for services rendered in the Philippines. So kato mga empleyado, withholdan gyud sila og mga taxes. Now, requirement of withholding. Every employer making payment of wages shall deduct and withhold upon such wages a tax, except for a minimum wage earner. Kaya ang minimum wage earner again is exempted from taxes. So, dili sila pwede withholdan og taxes. Now, what are the individual returns? So may mga ipang file ani. So, who are required to file the returns? So, tanang mga tanang mga kinds of income taxpayer, except for ang wala lang na mention diri kay ang katong non-resident alien not engaged in trade or business. Who are not required to file? So, kisa may dili required to file, those individual whose taxable income does not exceed 250,000. Pure compensation earner, okay? Pag pure compensation earner, dili na sila required kay tungod ang ang ilahang employer naman ang mag-file sa ilahang return. Then, individual whose sole income is subject to final tax. Then, minimum wage earner or individual exempt from income tax under tax code and special laws. And where to file? That could be done in the authorized agent, bank, revenue district officer, collection agent, duly authorized treasury of city or municipality where he resides or has his principal place of business, in case he has no legal residence or place of business, at the office of the commissioner. Authorized agent bank nato diri for example is Land Bank, pwede pod sa DBP, pwede pod sa PNB. Muna kung mga naibalaan nga authorized agent banks nga pwede makakolekta sa mga taxes. When to file? Individuals specified above should file annually on or before April 15. So, annual return nato is dapat on or before April 15 mapasa or ma-file. Individual subject to capital gains tax. If capital gains tax ang inyohang i-file, if shares not traded, dapat within 30 days after each transaction and a final consolidated return on or before April 15. So, every time na nakay transaction, nakay sale of shares not traded, dapat within 30 days after the transaction, mag-file ka og return and i-consolidate nimo for the whole year tanan mga sale transaction nimo on or before April 15. Kanang April 15 class mo na tong annual consolidated return nimo sa capital gains tax. For real property, within 30 days from the sale or disposition. Husband and wife. If not purely compensation earners, shall file a return including the income of both spouses. If impracticable, may file separate returns which shall be consolidated by BIR. But mostly, gina-require na sila ang spouses to file for a consolidated na income tax return for business income lang. Okay? For business income earner or mixed income earner kay kung purely compensation kung purely compensation earner, separate man siya. Kay each of their respective employer, kay sila naman ang mag-file sa ilang respective return. So, no need na siya for consolidation. Pero kung business siya, and then mixed income earner, kailangan siya mag-file consolidated for both husband and wife. Parents and kids, parents must include in their ITR the income of unmarried children derived from property received from a living parent, except when donor's tax has been paid on such property or when transfer of such property is exempt from the donor's tax. Again, this must include the income of unmarried children derived from property received from a living parent. Okay, so kung tahig naay pamana ang parent sa ilahang anak, so of course income man to siya sa anak, no, mahulog man siya nga income. So i-appeal po daw to siya sa ITR ni parent, ni living parent, except when there is a donor's tax paid. Kung nagbayad ang parent og separate donor's tax in relation sa gihatag niya sa iyahang anak, or when transfer of such property is exempt from donor's tax. Substituted filing. This is allowed for individual employees who are purely compensation income earners, deriving income from only one employer, and income tax has been withheld correctly by the employer. The said individual shall not be required to file ITR. The certificate of withholding filed by the employer, duly stamp received by BIR, shall be tantamount to substituted filing. So, moto kong giing kaganihan na if you are an employee earning compensation, so there's no need for you to personally file your income tax return. It is because your employer will be the one who will process the filing in behalf of you as the individual taxpayer. So, mo na siya ang substituted filing. Okay? So, that's it. So, that's end our lesson for this video. So, if you have clarification, you may also refer to these following sources to help you further understand the lesson. And if you have questions, you may ask me through our GC, or you may PM me, or during sa ato ang online classes, pwede mo mag-raise og question. Okay? So that's all for this video lecture class. Thank you so much and have a good day.